Shortly after Fed cut rates, China introduced its most aggressive stimulus on 25th September 2024. I don't know when you'll be viewing this. So for me, it's actually important what's happening there because I do have a stake in the game. I have portfolios exposed into China as well as Hong Kong. I'll share with you more in detail, so do stay right to the very end. Now, this recovery has been massive. The pace is crazy. As you can see over here, popular tech-focused China ETFs like KWEB up 51% on a month. CQQQ up 53% in a month. Hang Seng up 30% also. Then after this rally, an expected 10 to 12% depending on when you measure it. So when this crazy rally faded, I was very intrigued. I wanted to research a bit first before sharing with you what exactly are possible action steps that you can take to participate or at least to benefit maybe from this potential change in China as well as Hong Kong stocks. So let's take a look at the bold stimulus package as mentioned over here. There are three parts to it. The first is that this by PBOC, People's Bank of China, which is their central bank, includes the first, which is a cut on their reserve requirement ratios RRR by half a percentage point. It's a Fed reducing rate. And the main policy interest by 0.2 percentage point. So both of these are larger than usual. So PBOC has also indicated additional cuts are possible by year end. Very similar to Fed. If Fed reduces, I guess PBOC will also reduce and at that pace or more aggressive. Second, PBOC will cut mortgage rates for existing home loans by roughly half percentage point nationwide. This is to support residential property market. And the third is that PBOC will actually be creating a pair of new structural monetary policy tools to support the stock market. Key phrase, support the stock market. Eligible institutional investors will be able to borrow liquid assets such as treasury bonds, central bank bills directly from central bank, using assets like ETFs as collateral and then sell them to get the cash they need to invest more into equity markets. That in layman terms is just leverage. I'm going to lend you money to leverage. The central bank will provide refinancing loans for banks extending credit to publicly traded companies aiming to buy back their own shares. Wow. So this is just telling you, central bank say, go and buy your own shares. Don't worry, no money, I'll lend you. That is why some hedge fund managers read this as a ridiculous government initiative that's extremely powerful. Listen to this.
Believe this or not, swap facilities to buy stocks. Encouraging buybacks
right.
of stocks. Okay, this is China. Stock buybacks. Not only encouraging it, lending you money.
But back to these 3 points on this bold stimulus. I reflected over there, red mean for us international investors, I think it's not the biggest impact. The green one over there, whereby they are going to lend money to buy securities, is a direct prop up of stock market prices. Coming to here, let me share with you my interpretation on the situation. The first is that this rally is fueled by short sellers covering. As mentioned over here, short sellers are feeling the heat from China-fueled rally. These smart guys have lost more than $8 billion already. Again, for short selling, your downside is unlimited because you have to buy back in future, correct? If the stock price triples, your $1 of initial capital could lose $4 even. So that's why short squeeze rallies are that violent. Now it's easy to confirm whether there are short sellers or not. And before you get there, help me smash the subscribe button, especially if you learned something today and you want to keep tabs on the developments of Chinese equity and Hong Kong equity. I will be covering them on this very channel, so stay tuned for it. Let me next pull up Young ETF, which is actually the Direction Daily FTSE China Bear 3X ETF. This Young ETF has saw a 3-year net inflow of $157 million as shown below. But what we can see is that there's a big spike in August, September, correct? A lot of short sellers got the timing absolutely wrong. This has been further verified with other information such as this, which is short interest on one of the bigger China ETFs. 2024 is an all-time high for short seller interest. So again, the first leg up is short sellers internationally running, stampeding over each other to head for the exit. Let's pull back again the Hang Seng run up. 1 month, it's 30%. What about popular individual stocks that are shorted internationally? Let's pull out some of the 5 biggest: Tencent, Baba, Baidu, JD, and Meituan. You will see that Tencent has relatively underperformed all of them at 28%, Baidu 36%, but Baba is at 45%, JD and Meituan are at 80% upswing over the last 1 month. If you wish to trade Hong Kong stocks, I would recommend you Moomoo. Right now, Moomoo has a $0 commission for Hong Kong and A shares for both new and existing users for 30 days. I've redeemed my own commission-free card. Click on the promotions, my rewards, you will find it here. Click to activate it. I've deposited money myself by simply going back to accounts, deposit button, select pay now, and through this method, I've deposited a further $8,000. Do remember also to do currency exchange. When you want to buy your Hong Kong stocks, Moomoo actually has a very good exchange rate. I next went to build a watch list of Hong Kong stocks. You can find that it's very easy to find information about a company in Moomoo, such as its latest earnings and valuations. If you are a new user to Moomoo, there are further incentives for you. Simply sign up now and you can enjoy 6.8% per annum guaranteed rates for up to 30 days on Moomoo Cash Plus. There are 3 funds in Moomoo Cash Plus, and the first option is the Fullerton SGD Liquidity Fund, which provides the same day liquidity if you subscribe and redeem before the cut-off date. For this liquidity fund, it invests in the MAS bills, which are backed by the government. How this 6.8% guarantee works is Moomoo will for 30 days top up in addition to the returns you get a fund up to 6.8%. And if you park 80,000 inside, you will earn $447 worth of interest. So if you want to sign up now, use my referral links below. On top of that, you'll be able to unlock 4 stock bundles of top 5 traded US stocks worth $70 each and an Apple share worth $287. Still got one more offer. If you use my code, you'll get an extra $20 cash coupon. So that's worth $1,034 worth of welcome rewards in total. Disclaimer, Moomoo Cash Plus is an investment product. Principal is not guaranteed, and up to 30 days of 6.8% per annum is guaranteed only during the promotion period. After the promotion period, interest is not guaranteed. This is not comparable and is different from a fixed deposit or savings deposit. Investment in any capital market products involves risk and the risk of losing principal. So what are you waiting for? Sign up with Moomoo today. Let's get back to our discussion about this market rally. Prior to this recent rally, short sellers were profitably building their positions in a falling market. Since the rebound, however, short selling in the group has slowed. Getting scared already, yeah? And before that, it's just double down. Typical loss-making trader mindset. Before Beijing surprised the market with its stimulus plans, shorting China stocks have been popular, with a number of market observers underweighting the sector. It is true, recently there have been a lot of emerging markets ex-China funds. Previously, China has been a key component of emerging markets, so underweighting the sector means that. And some labeling the country uninvestable. Now, you may have heard that yourself. This has been fear-mongering going for a very long time. As mentioned in the survey, 19% of correspondents said that shorting Chinese equities was the most crowded trade, second only to going long on Magnificent 7 stocks. So you see where the FOMO is. The FOMO had become shorting China and longing Magnificent 7. The most painful trades for short sellers have been Baba and JD. On the flip side, traders betting against Neo, Li Auto, Xpeng, PDD are still in the black. Not true already, PDD has shot up through the roof. Even with the recent rally, short sellers aren't rushing to cover their positions just yet. That is actually why there could be a second wave of short seller panic. I'll touch on that in a while. Baba's stock price might see the greatest impact if shorts begin covering in size, as the stock has seen increased short selling into this rally. Now let me touch back on the point of some short sellers not rushing to cover back their positions. Some of them may have survived the May 2024 rally up of 20% that Hang Seng, for example, exhibited. This time around, they feel that they can just hold on and let things subside. But maybe this time around it's different. What if more and more people jump on the bandwagon and say, don't fight PBOC? What if more and more big hedge fund managers are waiting for the dip to help push the index up because they know short sellers have been squeezed? Let's pull back on the chart. Once it gets past more than 50%, it may become unbearable and short sellers might just panic yet again. That is why there's every possibility that this could be an extremely volatile period for retail traders. This leads to the second point, which is the majority of China retail investors, in my opinion, are not even in yet. The headline reads, China investors rush into stocks for fear of missing out on epic rally. Brokerages are bustling with business and there's an explosion in stock turnover. Some who are interviewed by the press have mentioned that they are starting to buy stocks using borrowed money. There's no other way to be rich other than doubling on stocks. Don't do that, huh? The market crash, as you can see this time, could be unprecedented. Now, while this comment seems crazy and euphoric, take note again, this, which is on 30th of September, is just 2 weeks into the rally. How much craziness can there be built in? You know, euphoria in stock markets need years to build. 2 weeks, we can guess that there's only early adopters, which means if we draw this chart out, you would realize that 70%, who are the majority, have not even taken action, have not even been persuaded to overcome their own biases. So that's why euphoria needs years to build the market. And this has really happened before. Let's look back in time. Previous index rallies have been at least 50% and for more than a year. If I was someone new who doesn't have China exposure, I would buy systematically. I think that is a good tactical approach. This is actually shared from a member in my Telegram group who has done very well and been very patient. You would see over here, he's invested since September 2021, correct? And consistently dollar cost average all the way until today. Right now, that portfolio sits in the green. And I would estimate that as of this time of filming, he's probably up 13 or 14% already. If it's super volatile, but generally still on the uptrend, dollar cost averaging still works. Lump sum, yes, on the uptrend, it might benefit more. But again, this is a very volatile period for China and Hong Kong stocks. I think a lump sum investment might be very emotional. And as always, if you'd like to join my Telegram group, I'll leave links below. Now, since you start with me right to the very end, let me share with you a bonus on what I observe, which is why I'm optimistic. If you look at the heat map for China stocks, large state-owned banks are doing very well. This heat map again is from our sponsor today, Moomoo. You would see that this sector has even recovered from this pullback. And on a longer time frame, they are actually confirmed on a bull leg up. For Asian markets like Singapore, you would realize that banks typically lead a bull cycle. Then the rest of the market catches up. And if the economy cannot make it, you would guess that banks won't be doing well already. Now, if we check in terms of Hong Kong side, banks are also leading the way. And besides banks, digital solution services, which is where Tencent sits, is also looking strong. Now, Tencent is someone that I feel has strong fundamentals, and it's something that I've covered before in a previous video, stocks that I'm secretly buying. Check out this previous episode I have. We've done some from here and see you there. Take care as always. Goodbye.